Well, thanks for joining us on the Market Day Report. I'm Marlon Bowling with you on a Leap Day Monday, and we're going to watch the opening of your grain trade and your livestock trade. In fact, let's go ahead and dive right into the prices here on the grain side of the ledger and see how things are starting out this week. Let's go take a look at that corn market. And on the corn right now, on the big board, we have the May contract. And we'll start with May because March is now in delivery as of today. All these March contracts are on the grain side. The May contract is 3/4 higher as we get things rolling. We're at 360 1/4. New crop December down one tick, down 1/4% at 378. And switching to the soybean side, on the soybeans, we have the May contract down just 1/2 cent at 863. September is down 2 1/4 at 870 3/4. On the wheat trade in Chicago, we have the May contract 3.5 higher at 455 3/4. New crop July 2.5 higher. What about the Kansas City market? Well, here we have the May contract up 2, and we have July up 2 as well. Spring wheat trade in Minneapolis shows May now trading 1/4 cent lower, and we have July 1/4 cent higher. So here to help us sort it all out, let's bring in some extra help. We have Dewey Strickler on the line. He's with AgWatch Market Advisors, and he's based in Franklin, Kentucky. Dewey, good to visit with you here on a Monday once again. Happy Leap Day to you as we wrap up the month of February here. Why is the wheat market showing signs of strength when the corn and soybean trade is kind of falling asleep here?
Yeah, it's much like watching paint dry here in the corn and beans. We've had some narrow ranges, but the thing in wheat, there's two items that stand out here right now. One, and that is last week the funds increased their short position to a record 685 million bushels. Now, for some of these guys that follow the technical analysis, you can look at some of these momentum indicators. They are showing a little bit of positive signs of bullish divergence, which means that the market's been going down, but the indicator's been moving sideways to higher. This may be starting to come in play here to the market to some degree here, but are we going to be looking about, a bullish trend begin to develop? Well, in wheat, you're going to have to see prices get above the recent high of 480 1/4, which would set a higher high. That has not taken place here as of yet, so we just have to bide our time and watch.
All right. Now, we had the acreage estimates that came out from USDA at their Ag Outlook Forum last week. And I would imagine that now, even though they are the official numbers that would be the gold standard against all other estimates could be combined against that or I guess compared against that. But that does leave a lot of room for adjustments here because planters haven't really hit the fields for the most part yet this year.
Yeah, that's exactly right. I take USDA's acreage numbers in the February Ag Outlook Forum mostly with a grain of salt. I look a little bit more, place more emphasis on the usage numbers there. That gives a little bit better idea, and you don't see as much change in the usage numbers as you would see in the acreage numbers. When you look at the acreage numbers, we're looking at corn 2 million acres higher and beans 200,000 lower. Neither commodity offers a profit potential. So how can we say now between the end of March of what producers are going to do?
And from one thing we have heard, the cotton acreage could be up maybe 10% this year. And if we look at the cotton prices right now on the board, on the overnight session anyway, we were showing extreme weakness out there. And right now we have that May contract still down 145 points at 56.08. And last year they were thinking 60 cent threshold was maybe the break-even point there. So we'll have to watch that very closely. Dewey, sit tight. I'll come back with you here in just a minute. We'll examine this livestock trade, including a very active cash cattle trade last Friday when we come back right after this. Thanks for joining us on the Market Day Report. I'm Marlon Bowling with you, and we're talking with Dewey Strickler right now. He's with AgWatch Market Advisors. He is based in Franklin, Kentucky. Now time to talk about livestock. And Dewey, last week, late in the day on Friday, we finally got some fairly aggressive cash cattle activity reported out in the plains, around the 137 mark in the central and southern plains, and we were all the way up to, I believe, 214 on a dress basis if you go further north, like in areas like Nebraska. So did that surprise you that they got the cash cattle market jacked up like they did on Friday?
Well, maybe just in a bit of a way here, but the cattle market has acted well technically here since about mid part of the month. Nice little solid uptrend in the cattle, and I think that just more or less induced the packers to come in and just pay a little bit higher for those calves.
All right, right now we have the market open. Yes, that's right, it's open. It is a Monday, and they did not wait till after 9 o'clock to open. They have changed their trading schedule now, and so everything is off and running at 8:30 across the board. So basically, the grains and livestock will be open roughly the same time from now on, and that'll be happening Monday through Friday on the livestock trade, so no more of that late open on Monday. February live cattle are 55 higher. Remember, they go off the board today. The April contract is 40 higher at 137.40. That's just a dime off of its high so far. June 35 higher at 126.30. On the feeder cattle side, in the early going this morning, we have the March up 25 cents at 158.90. We have April 33 higher at 159.18. May is coming in 30 higher right now this morning at 157.70. So moderate gains to report on the open here, Dewey. I guess a lot of folks were kind of wondering, how is it you can have such a sharply higher cash cattle trade on Friday when you had the wholesale market? The choice cuts were over $1 lower, selects almost $2 lower, and you had record high beef and pork inventories at the end of January.
Well, it just boils down to the fact that you had a few packers were short just a little bit of cattle that they need to buy to even the week out.
So what are they going to be doing here for featuring now? Because I'm assuming that maybe the ham purchasing is pretty much done for the Easter holiday. Do you think they're focusing more on the barbecue cuts now?
Well, I think that very well could be. I mean, we're looking here at March is just, well, actually starts tomorrow, and you're going to be looking at some warmer temperatures. You're going to be looking at people pulling out the barbecue pits here in a couple of weeks and trying them out. So, yes, I think you're going to see a little increased demand in the barbecue.
Well, you can count me among that number, that's for sure. I do want to ask you about what's going on with the outside markets here today. The dollar was firmer as we came out of the overnight session. In fact, it had been up over 200 points. Right now, we're up just 100 points on the March dollar index futures. The crude oil market was a little firmer today. So is that going to have any spillover impact on the livestock trade with the value of the dollar this week or not?
I don't think when you're looking at the dollar just barely higher here and crude oil up about 50 cents, I don't think it's going to have a great deal of bearing. I mean, from time to time, the grains and the meats, they do look at the outside markets, and then there are other times that they don't really look at them, and I think this may be one of those days or maybe one of those weeks in which they just may not pay a great deal of attention here.
All right, let's look at the lean hog trade, and on the futures right now we have April down 45 at 70.40, May is up 16 at 77.08, and then June is down 33 at 80.52, so a mixed bag. I'm hearing that was considered to be just a technical correction last week?
I think it was. The hog market looks like that we may get up past in the April beyond the high we made last week of 72.22 by maybe just a small degree. But I'm going to be looking for about a $5, $6, $7 drop in these April hogs here, and probably not too far distant future.
Really interesting. All right, thanks, Dewey. I appreciate that. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Always good to hear from Dewey to see what he's got to say about the livestock trade.
All right, thanks so much, Marlon. I appreciate it.